Welcome to ZICA Academy YouTube channel. In this lecture, I want to examine contract costing. If you are coming across my lecture for the first time, please like the video and also share it with others. If you are a returning subscriber, I say thank you for being part of this channel. Contract costing is the form of a specific order costing which is used where job is undertaken to customers' special requirements and in which each order is of long duration. I want you to know that contract costing is similar to job costing, except that job costing is of short duration, while contract costing is of long duration. Now, let's look at the definition, the terminologies that will be used in contract costing. Definition of terms. Definition of terms. Number one term which I will examine is contract price. Contract price. Contract price is the value of the contract. Contract price is the value of the contract as agreed between the contractor and the contractee. The value of the contract as agreed between the contractor and the contractee. Number two, we have progress payment. Number two, progress payment. Progress payment. This is the amount paid by the client at the specific stage of the work. The amount paid by the client at the specific stage of the work. That is progress payment. Number three term which I will examine is retention fee. Retention fee. Retention fee. This is the amount agreed to be withheld. Amount agreed to be withheld by the contractee at the end of the contract, and which will be released to the contractor after the agreed period. Retention fee is the amount agreed to be withheld by the contractee at the end of the contract, and which will be released to the contractor after the agreed period. Number three is cost to date. Number four, cost to date. Cost to date, this is the total cost incurred, the total expenditure incurred on the contract up to the end of the accounting period. The total expenditure incurred on the contract, the expenditure incurred on the contract up to the end of the accounting period. We didn't say up to the end of the contract, the end of the accounting period. Maybe the accounting period is December 2024, and this contract might still extend to July 2025. So the expenditure incurred up to the end of, from January 2024 to December 2024, or from the sanction of the contract to the end of the current accounting period. That is cost to date. Meaning that any expenditure incurred after the end of the accounting period to the date of completion does not form part of the cost to date. The cost to date are expenditure incurred from the sanction of the contract to the end of the current accounting period. I've told you this does not include costs incurred to complete the contract. It does not incur cost to completion. It does not include cost to completion. It does not incur future costs incurred on the contract. Number five, we have cost of work certified. Number five, cost of work certified. Cost of work certified. Not satisfied. Not like this. This is the correct spelling. Certified, not satisfied. Please take note of the spelling. Cost of work certified. This is the total cost incurred on the portion of work approved by the contracting engineer. The total cost incurred on the portion of work certified. Cost of work certified is the cost incurred to date, cost to date, less cost of work done not yet certified. Cost to date, less cost of work done not yet certified. That will give us cost of work certified. Number 6 is value of work certified. Value of work certified. Value of work certified. This is the market value of the work certified. The market value of the portion of work that have been approved by the architect, the work that have been approved by the contracting engineer. So the portion of that work that have been approved, the architect, the engineer have approved it, that this work is satisfactorily completed. The portion of the work that have been approved by the contracting engineer is said to be the value of work certified. Number 7, we have notional profit or loss. Number 7, notional profit. It could be a profit or loss. It could be a loss. Notional profit or loss. This is the profit earned. The profit or losses earned on the contract to date. The profit or losses earned on the contract to date is said to be the notional profit or loss. It is the difference between the value of work certified and the cost of work certified. The difference between the value of work certified and the cost of work certified. We have a notional profit if the value of work certified is greater than the cost of work certified. But we have notional loss if the value of work certified is less than the cost of work certified. That is, the cost of work certified is greater than the value of work certified. Notional profit or loss will be value of work certified, value of work certified, value of work certified, less cost of work certified. Remember, I've told you that cost of work certified, I've told you it is cost to date, less, from cost to date, less cost of work done not yet certified. From cost to date, we subtract cost of work done not yet certified. That will give you cost of work certified. If you deduct cost of work certified from, cost of work done not yet certified. If you deduct it from cost to date, then you get cost of work certified. If you subtract cost of work certified from the value of work certified, you have the notional profit or loss. I've told you it is a loss where it is negative. But where it is positive, you have a notional profit. Number 8, we have the estimated profit. In every question, one of these will always be calculated. You may either have notional profit or you calculate the estimated profit. I will tell you where you will need to determine the notional profit in the question and where you will need to determine the estimated profit. What do we mean by estimated profit first? Estimated profit is the difference between the contract price and the estimated total cost of the contract. The difference between the contract price from the contract price. I've told you is the difference between the contract price and the estimated total cost of the contract. Less estimated total cost. Then this estimated total cost will comprise cost to date. Cost to date. Then you add cost to completion. Cost to completion are usually the estimated future cost. Future cost. Estimated future cost. That is usually cost to completion. Then if you are given guarantee and rectification cost. The sum of this will give you the estimated total cost. If you now subtract the estimated total cost from the contract price, you get the cost today. Estimated profit. Estimated profit or loss. It is negative, no, it is estimated loss. Now, what I want you to note in examination question, one of these, number 7 and 8, will be calculated. But when will you need to calculate the number 7? You only calculate the notional profit or loss, where you are not given the estimated cost to completion. Where this information is not given, that's why I put double asterisk. Where it is not there, that means you cannot calculate this. The only alternative is to calculate the notional profit or loss. But where you are given the estimated cost to completion, that is, where you are given the future cost to complete the contract, then it is estimated profit you will need in such a question. Please take note of that. Then the next part I want to consider is the profit taking. That is the amount of profit that will be taken to statement of profit or loss. Number 9, we have profit taking. I've told you that profit taking is the amount of profit recognized in the statement of profit or loss. The amount of profits to be recognized in the statement of profit or loss. The amount of profits to be taken to the statement of profit or loss at the current accounting year end. That is the profit taking. So the profit taking, the calculation of profit taking depends on the progress of the contract. Where the contract is nearing completion. Number 1, where contract is nearing completion. That means the outcome of the contract, the outcome of such contract can be reliably measured. That means the estimated cost of completion will have been known. So this is no. Estimated cost to completion. If a contract is nearing completion, let's say it is above 80% completed. So the estimated cost of the contract, estimated cost to completion. Estimated cost to completion must have been known. So in that case, estimated total profit will have been ascertained. Estimated total profit. This will have been ascertained. That means this is also known as well. In that case, the profit taken now, profit taken can be calculated in one of these ways. Number 1, we have the value of work certified. Value of work certified. Certified over contract price times estimated total profit. I've told you the outcome of the contract can be reliably measured. I've told you the estimated cost to completion must have been known. That means estimated total profit will have been ascertained. So in that case, profit taking can be value of work certified over contract price times estimated profit, estimated total profit, not notional profit. Or you may use this progress payment to date, profit taking. That is progress payment to date. Progress payment to date over contract price times estimated total profit. Estimated total profit. What is the relationship between the first two formulas? This formula, allowance is made for retention. They have made provision for retention fee here. But this one now, no provision were made for retention fee here. Then another one is cost to date. Profit taking, which will be cost to date over estimated total cost times estimated profit. Estimated profit, estimated total profit. I've given you the format for calculating the estimated profit or estimated total profit. So that is where the outcome of the contract can be reliably measured. Where the contract is nearing completion, say it is above 80% completed. But number two, where the contract is between 30% to 80% completed, it's not yet nearing completion. That means the outcome of the contract cannot be reliably measured. The estimated cost to completion is not known. Where the estimated cost to completion is not known, that means estimated total profit cannot equally be determined. That means the only thing you can do is to calculate the notional profit. So in that case, profit taking, where estimated profit cannot be calculated. I've told you, in that case, you don't know your cost to completion. You can only know cost to date. Cost to date is known, but cost to completion is not known. So the only thing you can do is to calculate the notional profit. That means what you can calculate here is notional profit. So that means profit taking in this case. Profit taking. That will be 2/3 of notional profit. 2/3 of notional profit times cash received over value of work certified. Value of work certified. So this is the method of calculating profit where contract is not yet nearing completion, where it is between 30% to 80% completed. That means where estimated cost to completion is not known. Number three, where contract is just at the earlier stage. At the earlier stage of the contract. Say less than 30% completed. The contract is just at the beginning completed. So in this case, you cannot know cost to completion. That means you cannot determine the estimated profit. So the contract is just starting. So in this case, no profit or loss should be recognized. Where the contract is at the earlier stage, at its earlier stage. The contract is just beginning. The contract is just starting. The contract is at its earlier state. So in that case, no profit or loss should be taken on such contract. So these are steps for calculating the estimated profit and the profit taking. Construction Limited is currently working on 2 contracts with the following details. As at December 31st, you have contract A and contract B, amounting thousands naira. We have materials 16,140 and 23,100 for contract A and B respectively. Wages 61,900 and 23,136. Expenses on site 8,270, 10,344. Plant purchase 191,000 and 78,000 for contract A and B respectively. Accrued wages 5,060 and 2,690. Materials at site, materials as at 31st of December 2,670 and 7,680. Value of work certified 140,000 and 102,000. Cash received on certified work 119,000 and 76,500. Completed work not yet certified 4,450 and 2,640. Head office charges apportioned 15,660 and 12,230. The plant valued as at 31st of December 152,800 and 62,400. The contract valued is 500 million naira for contract A and 350 million naira for contract B required. Prepare contract A and contract B accounts for Joy Construction Limited as at December 31st in a columnar form. Show the profit taken at year end and the balances carried forward. Show workings where necessary. This question is obtained from ICAN May 2023 Management Information question number 3. Now let's have the solution to the question. The name of the entity is Joy Construction Limited. And you have to prepare contract A and contract B accounts for the year ended December 31st in columnar form. Now, let's have the title. Joy Construction Limited. So you want to prepare contract account. Contract account for the year ended December 31st. The year was not stated. You have to prepare for contract A and B in columnar form. Let me have a column for contract A and a column for contract B. Contract A, contract B. Also a column for contract A column for contract B. A and B. Amount in 1,000 naira. 1,000. 1,000. 1,000. So I've told you all expenses or cost of items that are used up in the contract. I said you should debit them, or anything brought to the contract. Anything brought into the contract, you debit them. So materials 16,114 and 23,100. Material was brought into the contract as an input. So you debit it. Materials 16,140 for contract A, and contract B we have 23,100. Back to the question. You have wages 61,900. Wages was incurred in the contract. So wages of those people that work in that side, 61,900 and 23,136, they'll be debited. So wages, 61,900 and 23,136 for contract A and B respectively. Expenses on site. These expenses were incurred in the site, 8,270 and 10,344. Expenses on site, that is 8,270 and 10,344. Plant purchased. This plant was brought into the site. That is why you have it as plant purchase, 191,000 and 78,000. Plant purchase. Plant purchased and was delivered to site, 191,000 and 78,000 for contract B. Accrued wages. These accrued wages, you may add it to these wages or you record it separate. Let me leave that. I've not recorded this. I might choose to add the two or I record them towards the contract, towards the end of the contract. Materials as at 31st of December. If you look at this, you have materials here, and then you equally have having materials as at December. The one as at December means December 31st is the end of the accounting period, since the year end is December 31st. And you were given materials as at the year end. It means these are unused material in site. Since these materials were not used up in the contract, they were not consumed, they were not used up, you are going to credit them. So materials carried down, 2,670 and 7,680. That will be credited. Materials carried down, that is unused materials. So because you were given the date, which is the end of the current year, 2,670 and 7,680. Back to the question. This is the value of work certified. These have not been recorded. Let me assure you that. Cash received on certified work. This is the amount received. So, completed work not yet certified. This is cost of work done not yet certified. So, that will be credited. You credit it to the contract. 4,450 and 2,640. Cost of work done not yet certified. Or work done not yet certified. Work done not yet certified. And that amounted to 4,450 for contract A, 2,640 for contract B, 2,640. Back to the question. You have head office charges apportioned. These were apportioned to the site. They are expenses that is apportioned to this contract, so you debit them. 15,660 and 12,230. Head office charges apportioned. Head office charges apportioned, 15,660 and 12,230. Back to the question. Then plant valued as at 31st December. This is the year end. Remember, certain plants were bought here, 191,078,000. But you were not given the one as at the end of the current accounting period. That means these are the unused plants, the one that were not consumed in the contract. So you credit them. Plant 152,800 and 62,400. Plant carried down 152,800. 52,800 and 62,400. So you were given the contract value. This is the contract price, so it will not be recorded in the contract. So the items that have not recorded include accrued wages, value of work certified, and cash receipt. Cash receipt will not be entered, will not be recorded in the contract at all. So accrued wages, I've told you, you either add it to these wages. Since we have recorded the wages, so let's just carry it down at the debit side. Wages was debited, so the accrued wages too should be debited. So we have accrued wages carried down. For contract A, we have 5,060. For contract B, we have 2,690. So the only items we've not recorded so far are cash received, value of work certified, and cash received on certified work. I've told you the cash received will not be recorded. So let's total the two sides of the contract. How much do you have? At the debit side, contract A, 16,140 plus 61,900 plus 8,270 plus 191,000 plus 15,660 plus 5,060. The debit side is totaled 298,030 for contract A. 298,030. That of contract B, we have 23,100 plus 23,136 plus 10,344 plus 78,000 plus 12,230 plus 2,690. We have 149,500. 149,500. That is for contract B. Then the credit side of the contract A, we have 2,670 plus 4,450 plus 152,800. The credit side is totaled 159,920, and the debit side is greater than that. Since you have credited work done not yet certified, which are formed part of the items added here. That means the balancing figure, the amount by which the debit side exceeds the credit side, will be cost of work certified. But if this figure is not credited here, if you did not credit work done not yet certified, then you will get cost to date. So you will get cost to date. But since these have been credited, you will get cost of work certified. Cost of work certified, which is the balancing figure. balancing figure. So, you know we have 159,920. If you subtract it from 298,030, 298 and 30, then the balancing figure is 138,110. 138,110. The total will be 298,030. Then for contract B, we have 7,680. 7,680 plus 2,640 plus 62,400. The credit side is totaled 72,720. If you subtract it from the debit side of 149,500 minus 149,500, then you have 76,780. 76,780. The total is 149,500. This is the cost of work certified. We will bring the cost of work certified down here. So cost of work certified brought down. Contract A 138,110. Contract B 76,780. Then you now credit value of work certified. Value of work certified. So, back to the question. How much is the value of work certified? Contract A, 140,000. Contract B, 102,000. Value of work certified. Contract A, we have 140,000. Contract B, we have 102,000. Remember, I've told you that the difference between value of work certified and cost of work certified, I say it represents notional profit. If you go by the definition of notional profit I've given to you, I told you notional profit is the difference between the value of work certified and cost of work certified. And I told you that the cost of work certified is the cost to date less cost of work done, not yet certified. Please take note of that. Now that we have gotten the value of work certified and the cost of work certified, the difference between them represents the notional profit. Calculation of notional profit. Notional profit. Remember, you have two contracts. Notional profits or loss. We have contract B and contract A. Amount in thousand. For each of the contracts, I've told you notional profit is value of work certified For contract A, the value of work certified is 140,000. While that of contract B is 102,000. We have 140,000 and 102,000. From there, you deduct cost of work certified less cost of work certified. I've told you that cost of work certified is the difference between the cost incurred on contract to date less the cost of work done not yet certified. So, we have gotten the cost of work certified from the contract account. I've told you if this figure was not credited, cost of work certified, work done not yet certified. If we didn't credit this, that what you would have gotten would have been cost to date. Then, to now get cost of work certified, you now subtract this figure from your cost to date you have gotten. Then in order to get the cost of work certified. But since this have been credited, So you will only get the cost of work certified. So we deduct these figures. 138, 110, 76, 780. So we have 138,000, 110, and the second one is 76,780. In this question, you cannot determine the estimated total profit because you are not given the estimated cost to completion. You are not given future cost to completion are not provided in this question. So that means you cannot determine the estimated profit. The only profit you can determine is the notional profit. In that case, so you make use of the notional profit. So we have notional profit. $140,000 minus 138, 110. Then you have 1,890. For contract B, 102,000 minus 76,780. You have 25,220. So how much will now be the profit taken? Profit taken. Since it is notional profit you have gotten, that means the formula to use could be 2/3 of notional profit. Notional profit times cash received over value of work certified. For contracts, you have two contracts, 2/3 of how much is the notional profit? 1,890 times how much is the cash received from contract A? Back to the question. The cash received is 119,000. How much is the value of work certified? Value, this is not yet certified. Value of work certified is 140,000. So you have 119,000 over 140,000 times 119,000 over 140,000. Therefore, profit taken. That is profit taken to profit or loss. That is the meaning. So 1,890 times 2 divided by 3 times 119,000 divided by 140,000. So you have 1,071. 1,071. That is for contract A. Contract B, 2/3 of notional profit, which is 25,220 times how much is the cash received from contract B? Back to the question. Cash received on work certified 76,500 and value of work certified 102,000. So we have 76,500 over 102,000 times 76,500 over 102,000. So 2 times 25,220 divided by 3 times 76,500 divided by 102,000. Then you have 12,610 for contract B. 12,610. So profit taken. Profit taken. Carried down. Contract A, we have 1,071. Contract B, 12,610. 1,071 12,000 system. Then you look at the credit side, it will still be greater than the debit side. So the remaining balance will be profit not yet taken. So 140,000. The balancing figure is the profit not yet taken. 140,000. This is 102,000. 102,000. How much is now the balancing figure in this case? 138,110 plus 1,071. This is total 139,181. Subtract it from 140,000. So you have 819. That is the profit not yet taken. 819. Then let's add this. 76,780 plus 12,610. This is total 89,390. And subtract it from 102,000. We have 12,610. 12,610. So the accrued wages carried down will be brought down to the next period because it haven't been paid. So accrued wages brought down. So for A, 5,060, 2,690. 5060, 2,690. Then the profit not yet taken, and that is 819 and 12,610. Profit not yet taken. So 819, 12,610. 819, 12,610. Look at the credit side. Your use item there, materials, 2,670 and 7,680 will be brought down to the next period. So we have materials brought down. For A, we have 2,670. For B, you have 7,680. Then we also have this work done not yet certified. Since it have not been certified, that means we assume it to be work in progress. It will be brought down 4,450 and 2,640. So we have work in progress. Because it have not been certified, that is why we call it work in progress. So which is 4,450 and 2,640 for contract B. Then we also have unused plant. So it will be brought down to the next accounting period. 152,800 and 62,400. So we have plant brought down, which is 152,800 and 62,400. So this is the solution to the question. This marked the end of the solution to the question. Please drop the love emoji. Also share the video with others. Thanks for watching ZICA.